I love how you throw out some of these names on halftimes that we never talk about. Booz Allen, Waste Connections. I mean, are you looking down the market cap scope for some unloved picks?
Well, Brian, I love the trivia about the Dow. But Booz Allen and Waste Connection are solid companies. I mean, no pun intended about waste, but definitely mid-cap names that have been around for a long time. Booz Allen is one of the major defense contractors, government contractor, does a lot of work on cybersecurity. It's underperformed this year. The Biden administration cares a lot about the cyberspace. And, we've had this big ransomware attack. I think this is a very, very hot time in that space. Artificial intelligence, Booz Allen is one of the leaders. And we think that it's an attractive stock right here. Waste Connection, that's a business that last year, suffered in that commercial businesses did not go to the office. And they didn't generate the type of business and volume that, most trash pickup companies would have expected. This year, people are coming back into offices, and you're going to see price increases across the scale. I mean, they have pricing power in the trash business. Municipalities are doing pretty well because real estate prices have gone up and real estate taxes are up. So we think both of those stocks should perform well. They're to some extent reopening infrastructure type plays. And that's why I picked them. I also had large cap and some small cap names, but I like those too.
Well, also, speaking of real estate, I've heard you talk about ReMax in the past as well. We talk a lot about the housing market being on fire. We don't actually talk about who may be making money from it.
Right, exactly. So ReMax is one of the largest real estate brokerage firms in the country, and they've expanded into mortgage banking also. And, ReMax is one of those companies that sells in the mid-tier. They're not at the upper scale, and they're not at the lowest, but mid-tier, lots of volume in their business. And we haven't seen as much volume lately because there's a shortage of supply. And we know that perhaps as prices cool off a little bit, they will be more housing coming on the market, and we would expect that ReMax and their brokers begin to do a lot more business. It's not an expensive stock. Again, it's been a reopening play to some extent, but it has legs to go. So again, in the smaller cap space, we like ReMax.
Yesterday's RBI talked about the overlap between Goldman Sachs's hedge fund VIP list and overweight mutual funds in the 11 stocks that were in both baskets. In other words, loved by mutual funds and hedge funds. A lot of them were financials. Some of them were payment companies. MasterCard and Visa were both on the list. I heard a stat, Carrie, and don't quote me on it, something like for every home sold, like $50,000 additional gets spent on moving, sofas, new paint, whatever it might be. American Express was not on that list of 11 names, but if you like MasterCard and Visa, can you also not, you have to like Amex, I imagine.
Yeah, exactly. So we bought Amex a few months ago to some extent as a reopening play. The stock was a discount to the S&P. We haven't had any business travel, never mind any leisure travel. Amex really prospers when people start to travel, particularly overseas. They're a bank so that they're exposed to interest rates moving higher. So that was a positive. We're starting to see a big pickup in vacations and leisure travel. We haven't seen a pickup in business travel, but that is coming. And for that reason, we think American Express has a big runway. The stock has had a run recently, but AXP is a name that should continue to move further over the next year or two because that growth rate is accelerating. Visa and MasterCard, more consumer-based spending, and Amex, more business spending. We own it.
And finally, one of the names that was on that 11 stock overlap, the hedge funds and mutual funds both love, you also like United Health.
Yeah, so United Health, again, a little bit of a reopening play. We had a very sort of growth-based portfolio last year. United Health was a name we bought because if you looked at the hospital and the type of medical cases that were seen last year, the typical case was way down. Lots of COVID cases around the world, of course, and this country. So the UNH platform was not seeing the kind of business that they would normally. That started to change. Hospital visits, doctor visits, again, have moved toward, primary care, procedures, whatever people needed and was deferred should be happening now. And UNH, again, cheap stock, we like it a lot, and exposed to the right growth areas in healthcare over the next 2 to 3 years.
Shepard Smith here. Thanks for watching CNBC on YouTube.